some of you have reached out to me and basically have said that you have, limited amount of funds, maybe $1,000 or slightly higher to be able to put into your trading account, your own personal account, and you want to grow that pretty quick. Is there a fast way to go about doing so? It all depends on what you deem to be, quick or fast. With a small account like that, you're going to have to go into a compounding phase, all right? It's not like taking a larger sum of capital and putting it into an account and then being able to flip it quicker. Now, it's definitely possible, but always recommend to anyone watching and to my fellow traders out there who are interested in trading the future market, especially the micro futures, that's what I stress and recommend is going into trading the micros to start with and then building your account up. Continue working that day job that you're working and basically flipping the account little by little each and every day, compounding so that you can grow. Now, if you are, like I talk about in many videos, if you can try to capitalize 20 points on the day, you can actually watch a $1,000 account grow. I'm going to show you how to do so. Now, it's up to you as far as the number of contracts you want to trade. I wouldn't go crazy with it because with $1,000, yes, you could trade up to 10 micro contracts depending on your broker, because most brokers, typically speaking, it's about $100 margin per contract to be able to trade. The micro NASDAQ, for example, with the ES, you could trade a little bit more contracts. But let's say we're trading the NASDAQ futures because that's what I've been focusing on, over the last year and been pretty profitable in trading that, right? And consistently profitable. So the thing about doing so is micros with $1,000, again, you're looking to build slowly. So I wouldn't recommend maybe trading no more than maybe 3 contracts of that $1,000 that you have, or those 10 contracts that you can trade on the micros trading the NASDAQ. Because you don't want to leverage too much in the market. And even 3 contracts with $1,000 is still leveraging pretty high. But I believe it's a comfortable amount of money to where you're not losing a lot, because if you're aiming for 20 points, then and you're going for let's say a 1-to-1, aiming for 20 and you want to risk 20, all right? Or aiming for 20 and you're only risking 10, just depends. You're only risking up to a max of $120. Why is that? Okay, let's simply do the math right quick, and then I'm going to show you the strategy and kind of break it down pretty quick, how I go about looking for setups, all right? And this is how, if you're interested, if you've been watching the video content over time, this is how I grew or continue to grow an account over time as I do. And for anyone that is a beginner trader, this is how you can definitely get started, all right? My path and journey was a lot slower than what most people can, or how most people can approach the markets today and look to actually tackle them fairly quick today versus myself. The biggest means that I can actually tell you that slowed me down in my trading was not completely understanding market structure and understanding, the reversals in the market, what to identify, what to look for, things of that nature. So the quicker that you can master market structure, the quicker you're going to be on your way to profitability is what I'm trying to say. So that's why I'm trying to shortcut people or give them the quicker path or route by explaining things more in detail and stressing market structure. If you are just starting off, please do yourself the biggest favor and learn market structure. So without further ado, let's go ahead and jump into the little math portion of this right quick. Let me bring up a quick calculator and just show you what I'm talking about accruing or compounding $120 a day on $1,000 account trading the micro futures. Now, let's say for example, we have $1,000, right? $1,000, if we were to make $120 on 20 points a day, that's basically giving us a 12% accrual or compounding rate daily in profits, right? Well, how is that? Well, if you go for 20 points, right, which is basically 80 ticks, because every tick in the NASDAQ is, every point of the NASDAQ is comprised of 4 ticks. That's going to give you a total of 80 ticks. If you go in and trade, let's say 3 contracts, all right, times the tick value rate on the micro futures is 50 cents a tick, that's going to give you $120. So if you are risking 120 to gain 120, which is a 1-to-1 risk to reward ratio, you're really not risking a whole lot of money. It may, yes, in terms of risking in terms of the amount of capital you have, $1,000 versus 120, yes, you are risking 12% of that account. But in reality, when it comes to the dollar amount itself, a lot of people will say, yeah, I'm willing to risk 120 to make 120. It's not a lot of money, right? But it does compound over time if you know how to trade the correct way. So you do that times 5 days a week. That's going to give you $600 a week. So you went from week one with starting off with $1,000 capital. Now you're sitting at $1,600 capital. And by the end of the month, you profited $2,400 minus your commission. So, you're up over $3,000 in the account. You continue doing that in time, then you can start stepping up the trade, the Emini futures. Okay. I'm not saying trade 3 Emini future contracts. I'm just saying then you can start stepping up and trading, the Emini futures to where you may be trading 1 contract, 2 contracts max, but it's all about compounding and growing that account. That's what I'm trying to say. So again, you're risking 120, which is 20 points on the micro futures to make $120. Okay. Or if you want to go for, say, risk, 10 points, okay, and then go for a gamble of trying to collect on $120, which is 20 points on the NASDAQ future. So let's talk about how we can do so in the markets. And we need to be able to identify a structure, okay? So again, we're looking with those individuals that have $1,000 accounts, small accounts, they're starting off with, 20 points on the NASDAQ is easy to profit off of if you know how to trade the correct way, meaning we're looking to trade with the higher base charts. Okay. So the way I do it is I'm looking for a zone within a zone to where I'm having multi-chart confluence. So marking up zones off of my higher base chart to start with, and then doing the same, following suit, scaling down to a lower base chart. Okay. So let's say, for example, we look at Friday's session, which was the 3rd, and look at the prior day, which was the actual 2nd. We could see, prior to that, even the market was making lower lows and lower highs. And that's what you need to identify when it comes to structure is if we're making lower lows and lower highs, then we should only be looking for supply setups to go short. Okay. If we start to break through areas of structure back to the upside, even minor areas of structure, but we get a sign of a reversal, and this is where I'm talking about I struggled with when I started, was being able to identify reversals. Basically, it's like from the bottom, you're going to have an inverted head and shoulder type setup to where you have a left shoulder, a head, or inverted head, and then a right shoulder kind of formation where the market is breaking structure to the upside. Then that's when you want to start to see where you can start to go long. Okay. So let's look for an example here where the market started to break areas of structure back to the upside and we get that reversal type pattern. So this is a minor area of structure here after the market broke this low right here. So it made a low, lower high, and then it made a higher low right here because it didn't break this low, but then it made a lower high right here. So it was setting itself up to push lower, and then it broke below this major low right here. This is a minor area structure right here back to the upside. So the market starts to do what? Make higher highs and higher lows back to the upside. So when we start to see a bullish move back to the upside, and then it takes out, a bit of either, minor structure back to the upside as well, to the left-hand side of the chart, then that's a sign of a reversal to where they want to start pushing higher, especially when they start breaking structure and you see that, okay, there are gaps that need to be filled back to the upside, then you can almost bet that they're looking to push higher to start to fill some gaps in, because the market has to mirror itself and fill these imbalances back to the upside or downside. In this case here, we have this low. This is a consolidation area, and if you notice, or we have areas where the market starts to consolidate, meaning we have a low, then we have a high, then we have a higher low, and it kind of ping pongs back and forth to where you have the market just tapping off these lows right here multiple times. The market's consolidating. Is hitting the low back at the bottom. It's hitting the highs back at the top. So you have a consolidation area here, and then it starts to break structure back to the upside. That's a sign to where they want to start pushing the market higher. And then when you start to see where they're taking out structure to the left-hand side, say a minor area structure, then that's when you're going to say, okay, the market is trying to push higher to fill in those imbalances or gaps back to the upside. So when I saw that and I see moves like this, okay, to where consolidating, breaking structure higher, and then leaving behind a nice area of a demand, okay, because this is an aggressive area, and if you don't understand, demand versus supply, all it is aggressive selling is supply. Aggressive buying is demand, okay? So we got this aggressive buying back to the upside, a slight break of structure above this minor area structure right here, and the market pulls back to this key area of demand. Now, again, there are gaps to be filled back to this downside. So, yeah, it made this high here, breaking this area structure, made a higher low, and then it broke this area structure above here. It did come down and break this area structure right here, but we're still bullish to the back to the upside because, again, we didn't start reversing where we have, you know, that setup to where this would be a left shoulder ahead, and then we didn't get a right shoulder to the right side. So this is a first attempt of a break of structure or minor area structure to the downside, but because we didn't start where we got this run to the let's see here. Oops, sorry. Yeah, downside and then a pullback and then break structure again, where now we have a right shoulder break of structure to the downside. Then the market is still bullish to the upside because it's already shown where it's making higher highs and higher lows and breaking structure to the left hand side. So I'm just looking for a pullback to this area here because we're still bullish to go long. So this is an area of structure right here, or demand zone off the break of structure right here above this area. So when it broke the area of structure, leaving behind this area of demand, it comes back, taps into it. There's an imbalance, a small little gap resting back at the zone. That is probably the most important part to the strategy as a whole that I look for is, one, I must see a break of structure. It gave me that right here when it broke above this area. Two, is there an imbalance or gap resting back at the zone? Yes, there is. They're the same thing, gap or imbalance, okay? It comes back, it taps that area of demand where that imbalance is resting at. I'm just looking for a reaction to be able to go to the upside. But I'm not taking my trade because I don't swing a position style trade, and I don't want to get caught up in any means of drawdown. Okay, so I want to be able to minimize my setup, meaning narrow in and find a more precise entry point. This is where I'll move down to the lower base chart to see if I have a zone within the higher base zone. So the higher base zone is off the 120 range chart. We first identified that. It pulls back to it, it taps into it. So now I'm going to scale down to my lower base chart, which is my 24 range chart, my entry chart, to see, is the market going to retrace back, tap into the 120 range, that large zone right there, and is there a demand zone resting on the inside of that 120 range zone? Yes, meaning a 24 range demand zone resting on the larger 120. There is. So we tap the zone. Inside, there's a 24 range zone where the market broke structure to the upside. Okay, you can see it high. It came back here, made it low, and then it starts to push back to the upside, breaking this area structure above here at 21,288, we'll say that, okay? And there's a demand zone resting right there. So we have two, high quality demand setups, the higher base and lower base. So that's all the confluence I need to be able to look for a trade going long because we are bullish, and so we're looking for pullbacks to key area of demand. From there, it's a matter of, okay, where do I place my stop? Where I look to entry to take profit at? The stop is going to go in once it taps that area of lower base demand zone that we identified. Then we get the break and close of a candle above the last down bearish candle, okay? So the stop is going to go on the back end where we get the rejection point at, where we got the break and close of the candle to the upside, okay? So back here below 21,260 or 261, give yourself a few points there because they love, like, you see what they did right here? They pushed up and then came back. A lot of people start to get scared and then they get out the trade. But that's their way of really trying to stop traders out or fake them out and stop you out because they want you to get out the trade or try to stop you out so that they continue to move to the upside. So all it does is allow them to grab liquidity and push to the upside, okay, by stopping you out. So if you place your stop back below this area of 21,261 by a few points, you see it would have never came back there, and then it keeps pushing to the upside. Again, you can get in aggressive if you wait for the first candle close right here at 21,267, or wait for the market to break above that last bearish down candle right there, maybe around here at 21,270, and then go long. What are we going to be aiming for? We're going to be either aiming for some area of liquidity to be ran back to the upside. If we look at the higher base chart, let's see. It rejects here. There are areas of liquidity, especially at the highs, at this high right here, okay? At every swing high or every swing low, you're going to have where there is a area of liquidity that needs to be ran, okay? So in this case here, you can take your trade back up to fill these gaps back up to the upside. As you can see, there's gaps on these candles coming down. or for it to break this little zipper right here where there's liquidity, kind of equal highs resting right here, or run up to the high up here. Either way, it's a solid setup because we have a clear confluence of a higher base zone with a imbalance or gap attached to it. We'll follow a structure to let us know we should be looking, because we're bullish, to take a trade going long. And then we just scale down to the lower base chart to look for an opportunity to take the entry off of the 24 range zone that's on the inside of the larger base 120 range zone. So all that confluence that adds up lets me know, okay, I need to be looking for an opportunity to go long. Now, if I was looking at this in reference to the volume profile, let's see here. I'm just going to kind of like draw a range profile in this area to see, because I like to take my trades primarily at lower or weaker areas when the market has a lower area of volume below a high volume node, because the market likes to reject out of low volume areas, especially now. This is probably the last part of the strategy, or that I like to look at. Okay, so we pull back here, we tap the zone. Where are we at? We're at a low volume node in between this high volume and this high volume area right here. Low volume, all the other other means of confluence there, and I'm going to go long. Okay, so in reference again to the volume profile, we are at the low volume area as well. Now, I'm not using the volume profile 100%. It's like the last thing I'll probably look at, the last 10% of the strategy I'll look at to see, are we hitting against a high volume area or hitting against a low volume area back at that demand zone here. And we do the same thing in reverse of if we're looking to trade supply areas, the same exact thing. So that's what I'm telling you. You can take $1,000, but you have to be very limited to the number of contracts you're going to trade. Don't go in with 10 contracts or 6 or 7 contracts. Just go in with a few contracts. You're not risking a whole lot on that $1,000. I mean, $120 is not a lot of money. But again, it may all depend on the person. But risking 120 to make 120, I think is a good, gamble or a good bet in a sense. But if you're getting to high probability setups where you have multiple confluence, more than likely you're going to be able to pick up those 20 points. And as you can see here, the market reacted off of here. Let's say you got in here that 270 mark there, right? Look where it goes all the way up to. I think it actually goes up and breaks this high right here. It does. It breaks above that 21,440 area up there. So it went all the way up here and broke above, went way above 200 points on that move back to the upside if you would have gotten to the trade. So all we're trying to do is capitalize and collect on 20 points, just at a minimum. You do that daily. High confluence, high probability setups. You do that, you can take a $1,000 account week to week and profit $600. And then eventually it's like, once you start doing that, then you can start compounding even quicker. All right. From a week to week or month to month standpoint. Once you made that first, say, $2,400 or $2,500 in that month, then maybe you want to scale up a little bit. You could possibly do so if you want to, but I'm just here to show you that you can even take $1,000 small account and grow it by just kind of chipping away at it each and every day. All right. Not going in and say, I'm taking $1,000. I'm going in for trying to make $600-700 in a day, trade $1,000 account. That's going to be tough to do, but picking up a few $100 on a day, or $120, $150 on a day off a $1,000 account is definitely doable. So just want to show you guys that. I appreciate everyone tuning in and watching the videos. It is the weekend, but you know me, I'm always trying to push out relative or valid content for you guys to understand the strategy and how it works. And if you're a beginner, I would recommend definitely that you spend some time watching the video content here on the channel, and you'll slowly start to understand the strategy and how I trade. Now, if you're interested in joining the Discord community, it's free. The link is down in the description portion of the video. Come on and join us. Also, there's another link below that for anyone out there that wants to get more insight, information in reference to, more detailed information. Okay, so that it kind of help you grow at a faster pace and understand the setups a little bit quicker. What I do is there's a membership program. It's the Elite Channel Supporter program. It's through the YouTube tier membership program. So if you click the second link below the Discord link, it's titled Elite Channel Supporter. You're going to get access to tons of trade breakdown videos where I break down trades so you can understand setup after setup after setup. And I go in great detail talking about, structure, what I was looking at, why I took the trade, where to take your profit at, where to place your stop at, all those things so you can understand the type of setups I'm taking. As well as I did a great video on market structure for anyone that's struggling with that. And also you get the video playlist. Now, the video playlist, there's already tons of videos. Tons of videos there that are highly recommended videos that I would definitely watch. It's link by link series of videos there. So please watch those. And if you gain access and you're becoming a member, you get all that for just $6.99 a month. Not $699, $6.99. So, it's very inexpensive, but it's packed with a lot of information that may help you out in your trading, and has already helped tons of individuals that have been part of the program or part of the community here on our Discord and, come and go. I don't expect everyone to stick around for, crazy amounts of time. Once you've learned what you learned, then you can go about your business, unless you just love to support me as a content creator, because that's what you're doing, is supporting my efforts as a content creator by pushing out this content and helping other individuals understand the way that I actually do this and way I actually trade through my own perception. Okay. And you don't have to do it like me. Whatever, like I always say, whatever works for you, then continue doing that. If you trade different types of charts other than range charts, then continue doing that. If you are profitable, please continue to do so. Okay. But that's all I have for you guys. I appreciate it. If you haven't subscribed already, please take the time to go ahead and sub by clicking on that subscribe button. Make sure to turn your post notifications on by clicking the bell. Okay. And last but not least, if you can do me the biggest favor and click that like button, it helps get the content, the information out here on the channel to other individuals that are seeking the same type of information. Because it's all about passing along information so that other people, so that it can help other people down the road. Okay. So I appreciate it. Take care. I'll see everyone in the next one.